has, their inflation targeting is a policy, and therefore they have to reflect what true inflation is. But there are other factors, the demand and use for money. They have to target whatever their inflation is. And if, for example, the high interest rate, which was driven by the high T-bills, was the one driving other factor prices, then of course, they should stick there. Let the T-bill rate drag down the other, and then we'll achieve some kind of parity. But right now there's a big gap between, of course, the T-bill rate of inflation and the Bank of Ghana policy rate. But all of that is in the correction mode. It should over a short period of time, 6 months to a year, you should see some convergence of these rates. Hopefully more downward and more, inducing growth in the economy. Yeah.
Now, let me take you to the calls from fund managers. They are saying having over 90% of the funds being invested into government securities and all that, they feel there's the need for some sort of reallocation of funds. We should reinvest it into the private sector to prevent crowding out effect and all that. What do you make of it?
That's the first thing to do. Fund managers, of course, it's just because if we look at the rate of return on various financial assets, it's only reasonable that you think that lending to a private sector should give you a higher financial return. But the risk there is very high. So because risk was high, everybody was crowding into government paper. Now we've suddenly found out that government paper is not as safe as we all thought it was. So now it's proper for us to go and do the first thing, go back to first principles. So your first principle for allocating investable funds was always to your best well-assessed risk asset, which is in the private sector. And then, of course, use government as anchor in terms of just ensuring that you have near cash, you have some liquidity. But, that's supposed to be what investment profile should look like. But because government rates were very high and we all perceived it to be riskless, all the fund managers pushed their monies into those government instruments, and that's what resulted in what you call the crowding out. So the field is leveling out, and the private sector should now begin to see more funds flowing through and more risk assessments, being undertaken to ensure that we have safe and a balanced portfolio.
So we've seen interest rates being on a falling spree for some time now, over subscription and all that. What does this mean to the financial space?
Well, it just means improvements, not just in the government's own debt borrowing burden, but also it will scale back the aggregate